How to actually win in today's housing market without selling a kidney. If you're in your 20s or 30s and thinking about buying a house first, congratulations on still having hope. That's the first thing the market tries to take from you. Also, be sure to follow for continual info on Today Real Estate. Second, put down the artisanal latte and buckle up, because despite what your parents' suspiciously affordable mortgage payment implies, buying a home today requires a game plan smarter than your college group project, the one where 3 people did all the work and Chad never showed up. Let's get this out of the way. Your parents bought a house for what you now spend on Uber Eats and concert tickets in a year. They remind you of this every Thanksgiving. They love to say things like, "We just saved up for a year, went to a bank, and they gave us the money." Today, you save up for a year, apply for a mortgage, and the bank laughs so hard they send your application straight to the group chat for memes. Meanwhile, the Zillow listings read like bad Tinder profiles. Cozy fixer-upper. Translation, needs $100K in repairs and comes with a ghost named Mildred. Charming studio. Translation, you sleep in the kitchen and shower in what used to be a broom closet. Investor special. Translation, buy this and pray an out-of-town developer wants it more than you do. So why even try? Because having a place that's actually yours, with walls you can paint lime green if you feel like it, is still one of the best ways to build wealth over time. You just can't do it the way your parents did.
Let's unpack this through the tale of our friend Bill. Bill is 29, he works in IT, owns 3 pairs of nearly identical sneakers, and drinks cold brew he swears tastes just better than hot coffee on ice. Bill watched his older brother buy a suburban house back in 2015 for the price of a used minivan. Feeling inspired, Bill decided he'd do the same, but with flair. He wanted the trendy neighborhood, walking distance to ramen bars, exposed brick, maybe a rooftop patio for parties he'd never actually host because, well, Bill prefers video games and takeout. So Bill did what any sensible millennial does. He Googled how to buy a house. He watched 3 YouTube gurus, each contradicting the other. He downloaded a budget tracker. He stared at said budget tracker until a single tear rolled down his cheek. Turns out, Bill had saved up a grand total of $5,871.42, enough for exactly 0% of a down payment in his dream zip code. Did Bill give up? Of course not. He's stubborn, plus he told all his friends he'd host the best rooftop BBQ of the decade by next summer, so now his pride was on the line. He did 2 critical things instead. 1, he adjusted his expectations from luxury exposed brick in the trendiest part of town to solid starter home in a transitional neighborhood that people will brag about living in 5 years from now. 2, he got creative and realistic about money, timing, and who he'd have to become to pull this off.
Bill learned 3 truths the hard way. Truth hash 1. The house you want and the house you can afford might not be the same thing, but the first house is rarely your last house. Truth hash 2. Your friend who says renting is always smarter is probably helping pay someone else's mortgage. The landlords. Truth hash 3. You don't have to do it alone. Smart people build teams. A good agent, a savvy lender, maybe a side hustle or 2. Fast forward 18 months. Bill owns a modest 3-bedroom 25 minutes from downtown. No rooftop patio, but plenty of room for a grill in the backyard and an office for his gaming rig. His equity is growing every month, and the neighborhood is up and coming, meaning they finally opened a craft beer place and a bagel shop. He's not done, he's just started. And so can you. So what's the moral of Bill's story? Winning in today's housing market means playing the long game while avoiding the comparison trap. Bill didn't get the perfect place, he got his first place. In 5 years, he'll likely sell or rent it out and trade up. Meanwhile, every month he's building equity, building credit history, and building wealth, which beats explaining to his landlord why there's a sword-shaped hole in the drywall when he moves out. It's not about buying the dream home at 27, it's about not waiting until you're 47 to wish you'd bought something back when you could still sleep on an air mattress without needing chiropractic care for a week.
Action steps. How to win now and avoid Bill's mistakes. Alright, future homeowners, here's your low BS, subtle humor, big truth checklist to stand a fighting chance. 1. Get real with your numbers. Open your bank app. It's scary, but so is your high school GPA. Look at how much you actually make after taxes, how much you actually spend, not counting that 1 month you barely ate out, how much you can save every month without turning into a hermit. Pro tip, banks want you to spend no more than 28 to 30% of your gross income on your total housing cost. So if you're making $60K a year, that's roughly $1,500 a month for mortgage, taxes, and insurance combined. 2. Know your credit score like it's your Tinder bio. Good credit =, better mortgage rates =, lower monthly payments =, more avocado toast for you. Check your score. Free sites exist. Pay down debts that are hurting your score. Avoid big purchases like a new car. 6 months before applying for a mortgage. 3. Get pre-approved before you fall in love with a house. This is like deciding what you can afford on the restaurant menu before ordering the lobster. Talk to a reputable mortgage broker or bank. Get a pre-approval letter. This tells you exactly what you can afford and shows sellers you're serious.
4. Expand your map. Your dream neighborhood might be out of reach now, but the next hot area probably isn't. Look for areas with new businesses opening, local infrastructure investments, new transit stops =, good sign, slightly longer commute =, a much cheaper mortgage. Remember, buy where you can afford today so you can afford where you want tomorrow. 5. Think small at first. Bill wanted the penthouse. He got the starter home. You might want 4 bedrooms and a 2-car garage now, but consider a townhouse instead of a detached home, a small fixer-upper with good bones, a duplex or triplex, live in one unit, rent out the others to help pay your mortgage. 6. Build your team. Yes, you can do it alone. Also yes, you might buy the world's biggest money pit. Get a trusted real estate agent who works with first-time buyers. Find a lender who explains things in plain English. Ask older relatives or friends who've done this what they wish they knew before buying. 7. Save for closing costs and emergencies. Surprise! Your down payment isn't the only upfront cost. You'll also need closing costs, 5% of purchase price, move-in expenses, new locks, maybe new paint, beer and pizza for your moving buddies, an emergency fund for stuff that breaks right after you move in, because it will.
8. Have a realistic timeline. Bill's first plan was buy next month. That didn't happen. Instead, he gave himself a year to save more, clean up his credit, and stalk the market like a raccoon stalks a trash can. Don't rush, but don't wait for a perfect time either. It's like dating. Perfect doesn't exist and you learn by doing. 9. Ignore the doom scroll. There's always an article saying, this is the worst time to buy a house in history. Sure, prices go up and down, but time in the market beats trying to time the market. Bill's place will probably be worth more in 10 years. His landlord's place would have been worth more too, but the landlord is the one getting richer, not the renter. 10. Celebrate your wins, even small ones. Saved your first $1,000? Treat yourself to a fancy coffee. Got pre-approved? Order takeout with no guilt. Put in your first offer? Go outside and touch grass. You're doing great.
Final word. Buying your first home in this market is a little like running a marathon while someone throws water balloons at you. Messy, exhausting, and a bit absurd. But people are crossing the finish line every day. Don't buy the dream house. Buy the house that gets you closer to it. Think of it as level 1. Beat it, and the boss level, your dream home, is next. So pick your neighborhood, pick your lender, pick your paint colors, and if you find a cozy fixer-upper, maybe ask Bill if he knows a good plumber. You've got this. Now go out there and win.